While you're reading this disclaimer, don't forget to subscribe, tap that like button, and bake yourself a cake because you don't have to wait until your birthday to celebrate something, do ya? Hey, and welcome to the next video in our Futures Basics video series. When trading futures, understanding commissions and fees is essential as they can affect your overall profitability. Now, before we jump into all the content here, if you're watching this on YouTube, make sure you click the link in the description to access the free members area so you get access to all these slides, any PDFs, guides, checklists, any resources that I have available, as well as get notified of any free live trainings that I do. Now, let's jump into the content here. So typically, futures brokers charge a small commission on each trade. For example, you might pay $1 to $5 per contract for each side of the trade. So if you buy and then sell one futures contract, you could be looking at $2 to $10 just for the cost of the trade in and of itself. Now, in addition to broker commissions, there may be exchange fees or clearing fees depending upon the broker, the contract type. And these fees just support the infrastructure that keeps the futures markets operating smoothly. Okay. Now, high frequency traders should pay close attention to these fees as costs can add up quickly with more frequent trades. Low frequency traders may feel less impact, but it's still important to consider fees when calculating out your potential profits. Now, honestly, this is one of the biggest reasons why I love futures. You see, when I was trading Forex, some brokers had fees that were so high, it was costing me as much as 50% of what I was risking per trade. So imagine placing a trade where you're risking $1,000 for that trade. A trade starts to go against you, and it maybe goes back up to around break even. So you're like, okay, cool. I exited at break even. Well, then you check your commissions and fees and see your account's down $500. Well, again, the less fees that you have, the less risk you're taking, because you can be wrong or somewhat wrong more often and not risk giving back a huge chunk of your profits. So again, remember, like in that case of that $1,000 trade, even if break even, where I was like buying and selling at the same actual entry and exit price, I was still getting charged as much as 50% of what I was risking in Forex because of that particular broker. The fees and commissions in futures is so minuscule compared to some of these other markets. So check the description below for my recommended broker and platform as well. Now, by understanding and managing your trading costs, you can make more informed decisions in futures trading. And this, again, is going to keep your fees down, keep your profits higher, right? So now let's look at another consideration in futures trading, the potential tax advantages. How are you taxed when you start earning in futures trading? We'll see you in the next video.